folks, Dan Frio here, the Mortgage Update. Today is Cinco de Mayo, which is May 5th for those gringos out there. Sorry. So what we want to talk about today, we're going to get back to the Mortgage Update with Dan Frio, and we're going to talk about mortgage rates today, and I'm going to guide you on where we are in the markets overall, what's going on with forbearances, and then we're going to do a comparison of rates. Like I told you yesterday, we're going to go run through 2 or 3 scenarios and different mortgage rates to show you where I am versus the competition and kind of guide you from there. So let's get on to it. Here's what happened in today's world in the mortgage industry. So -6, no big deal. We're going to go back to these levels right here. We love these levels. We love the stability in the markets right now. This is the area that we didn't want or didn't like because it was just throwing havoc in the markets. But now we have a lot of stability in the markets. So we like that. What I usually do on my channel for those new is I go through and I tell you, what economic data is coming out soon, like employment, unemployment, freight indexes, inflation numbers, manufacturing numbers. I hate to say it, but in today's world right now, the coronavirus is throwing a huge havoc in this whole market. Our GDP is down, employment's terrible, everything is bad, but everybody's predicting it should be very, I won't say short-lived, but it should be very short-lived. Once everybody gets back to work, things should recover fairly quick, except in the area of your mortgages and the forbearance things out there right now. And I want to go over that. I'm going to stress that again in today's video. And what's happening with forbearances, there are over, I think, 7 million households that have gone through the forbearance. And I want to, again, explain to you exactly what the forbearance is. It isn't you skipping a payment. It's actually you just postponing a payment until a further time. Normally that time right now, the norm is they're allowing you to postpone 3 mortgage payments, at which time when that 4th one is due, you go 4 months out, you have to make all 4 mortgage payments. So you get those 3 months that you skipped, plus that current month, you have to bring the account current. Okay, so that's what I'm trying to have everybody avoid, and ways to do that. The easiest way to do that is refinance. If you hopefully you have a job right now and you're not furloughed, that you can go in and refinance. The FHA and VA programs for refinancing are, we want you to be working, but we don't verify your job, nor do we verify your income. Basically, we pull a mortgage-only credit report to make sure your last 6 to 12 payments have been made on time and you have a 640 credit score or more. That's basically all we need. And then we can redo your loan at that time. The going rate right now on the FHA and VA streamlines is between 2.75 and 2.875, 30-year fixed. And there's not a gobload of fees. You're not talking 5, 6, 7, 8,000 in fees. Basically, if you're getting a FHA streamline, it's all that you're really paying for is the FHA fee. If you're getting a VA IRRRL, what they call it, as a streamline, all you're paying is the VA funding fee. If your loan amount is $200,000 or more, we will credit you back your any and all closing costs. So you won't have any costs to incur. And the goal is to try to help you skip 2 mortgage payments as well as drive down your mortgage payments going forward. So that's the goal with all of this. So let's discuss what is mortgage forbearance. So for those new out there, well, basically forbearance is, and it's happening to, this might give us the numbers. Let's see, from 9.3%, about 10% of all mortgages right now have tried to apply for the mortgage forbearance program. So what is the mortgage forbearance program? Well, it's part of the CARE Act. And let's just go down. Here's what I want to explain to you. Forbearance is when the mortgage servicer or lender allows you to pause, suspend, or reduce your monthly payments for a limited time while you regain your financial footage. Forbearance doesn't mean your payments are forgiven or erased. So what's happening, and I've talked to people all over the country, is they're getting these agreements. And I get it if you're out there and you're scared. And you're like, you know what? Right now, I just have to put food on the table and pay the electric bill and do whatever I got to do. I'll worry about that, my mortgage 3-4 months down the road. I get it. But if there's an alternative to that, why don't you at least explore it so you don't put yourself in a really bad position 3 or 4 months down the road? So the easiest way to do this is refinancing. And I won't go through all the different programs, but give us a call. We'd love to try to help you, or at least explain to you, here's some options that we can come up with for you. My job isn't to pressure you into a mortgage. It's basically to educate you, to inform you, to say, okay, here's how we can structure this loan for you. There's 2, 3, 4 different ways of how we can do that. You choose the best way for you. I'm not dictating on what you should or shouldn't do. I'm just saying, here's options that you have available to you. At least explore them. So that's that piece of the equation. Let's go now to, does it make sense to refinance? And where are rates? And how do we look up rates? What's the best way to find this? So what I like to do, and I'm going to do this once a week or maybe even twice a week, we're going to go over mortgage rates. And right now, a lot of people are trying to refinance, and they're trying to do a 30-year fixed rate, okay, because they're trying to stretch out that payment as long as they can to drive down those payments as low as they can. So let's go in here and say, okay, what are we looking to do in all these? Okay, so let's not even look at low cost. Let's throw all the costs in there. But we want an FHA and a VA, and we'll keep it at that. Refinance, I'll just keep in this zip code, property value 350, loan amounts 250. This is already predetermined. I just went to the website. 680 to 699 with a 30-year fixed. We go down and we see 3.49 on a standard conventional loan with $1,400 in fees. 3.25 for, I know I'm looking at, oh, shoot. FHA and VA with, yikes, 6,000 in fees. And guys, this is, let's go to featured lender. Let's see what that does. 3.49 on a 30-year fixed. 3.4. Okay, got it. So 250 loan, 350 value. So let's go to my website. This is my internal website. So we got 250,000. 350, I think that's what it was. 350,000, 250, 350. Yes, sir. 350 and 350. Refinance. What was the credit score? 680 to 699. So we're going to go 6. Let's go in the middle. 690. 690 credit score. Go through here. Debt ratio. Got it. I just fill in all these. It's irrelevant. Let's go to a 30-year fixed. And I want my conventional financing, which is conforming, and my VA and FHA. Let's go down and see where I'm at. And drum roll, please. My 30-year fixed rate. There's 2 different ones. FHA. Okay, we'll go right here. My 30-year fixed rate on my conventional financing is 3.625, and you're getting $400 back. They're at 3.49, so let's go there. 3.49. We'll go 3.5. So 3.5 would cost you $380. 3.5 here cost you $1,400. I win. Okay. FHA and VA 3.25. I don't even have to go there because I can't charge you that much money in fees. But let's just go there. 3.25 with an ungodly amount of fees. So we go to the FHA. Where are we? I know I'm looking right at it. I think it's up here. FHA. Come on. And my FHA rate today is in that parameter. 3.25. I apologize. 3.25, okay. And at 3.25, I am giving you back a credit of $1,600. Or you would go 3.125 and it costs you $300. So 3.125, okay, we'll go here. 3.25, I'm giving you 1,600. 3.25, they're charging you 6,000. So the difference is $7,000 in fees. 7,000 in fees. That's absurd. Let's go to Wells Fargo again. This is when I compare mortgage rates and current rates today. And again, I'm on the fly. I'm not predetermining any of this. 30-year fixed rate is 3.375. My 30-year fixed rate is 3.375. Oh, wait a second. They're giving a little comeback. Oh, no, we're looking at refinances. Oh, they're not even in the ballpark. 4. I'm killing them on that. And where's their FHAs? I'm not even going to go there. You get the whole point of this thing. Right now, the rates we have are fantastic. Turn times are unbelievable, and you'll be served personally. So I just want to wish everybody a happy Cinco de Mayo. My name is Dan Frio. I do the mortgage update every day. I apologize. I don't have a ton of data to give you to forecast where I see interest rates going because unfortunately right now it's a day-to-day business. I did have some information that I want to bring to everybody's attention. There are companies out there, one company, Caliber Mortgage, to do a cash out refinance. They were requiring you to have 6 months in reserves. What the 6 months is, you take your mortgage payment. So let's say your mortgage payment's $1,500. They want you to have 6 months of the $1,500 in the bank. So that's 1,500 times 6 is $9,000. So if you want to refinance with them, even if you have an 800 credit score and you only owe 50% of your home's value, if you want to refinance with them and pull out any cash, you have to have 6 months of your mortgage payment in the bank. That's one. Wells Fargo and Citibank, if you're looking to buy a home, they require a 700 credit score and 20% down. And there's another 2 or 3 lenders that I just heard of today that if you're looking to do a cash out, meaning if you're looking to refinance your home and pull out some money, either to put some money in the bank, pay off some bills, anything you want to do, if you're looking to pull out some money, they are not doing your loan. And they will do the loan only if you have an account with them. Guys, the forbearance is taking a toll on most lenders, and thank goodness, thank God that we are being exempt from that right now. Our business is going strong and robust. So if I can be of any help, please reach out. I'd love to help you. So the best way to get me is call me at 844-775-LOAN. That's 844-775-5626. Or go to thefrioteam.com. That's thefrioteam.com. Or you can even email me. And a lot of people do. They email me at dfrio, F-R-I-O, at preferredrate.com. Here's what I ask you to do. If you're in the middle of getting a mortgage right now, send me what's called your loan estimate. All the lenders have to issue you a loan estimate when you start the process of a mortgage. And basically that is going over the cost, the fees, the rate, and everything. That's what I'm looking for, because don't be wowed over the rate alone. I just talked to a young man today and he said, my bank's offering me 2.75 on a 30-year term. We looked at the numbers, $8,000 in fees. It was an FHA loan. I was able to do 2.75. His credit scores were good enough. I was giving him a credit of $1,600. So again, in that case, it was $7,000 different. If he didn't see this video, he would have probably taken that loan because they're like, no money out of pocket. We're going to put that right back in your loan amount. Well, you're still financing $7,000 extra, and you're paying on that over 30 years. So you're probably going to pay an extra they say it's triple, $20,000 on those fees. So please don't do that. So send me what's called the loan estimate, or if you're looking to refinance your loan, please do me this. Send me a copy of your mortgage statement, and that'll give me the rate, your address, and your balance. From there, it'll give me also with your address, I'll look up the value of your home. So the only missing element I really need is what your credit score is. So when you send me your mortgage statement, email that to me. Just give me an idea what you think your credit score is, and then I'll get back with you probably within the hour with an estimate of saying, here's what I can or can't do, and I'll break down the whole thing for you. So God bless. Happy Cinco de Mayo. And I will see you tomorrow, same time, same place. Take care. Bye-bye.